Gold just pulled back this morning after smashing through record highs. And traders everywhere are asking, is this just a healthy dip or a start of a trend reversal? Stay with me because in the next few minutes, I am going to break down why gold is pulling back, what levels I'm watching, and how you can position yourself for the next move. Welcome to Finspoke, where we make trading simple and profitable for everyday traders. Let's get in. Earlier this morning, gold hit 36.59 per ounce, setting a new record. But shortly after, sellers step in, pulling back price to 36.36. This is not just random. It's a classic reaction after a breakout rally. The dollar is still weak, yields are still dropping, and Fed rate cut expectations are at their highest in months. So the bigger picture is still bullish. The bigger picture of gold is still bullish. This is the bigger picture. It is still bullish. So don't panic. Come with me. Let me show you what is happening under the hood. There is technically overbought. Gold is on overbought level, as you can see here. The moment the relatively strength index crosses 70, that is an indication that that particular asset is overbought, as you can see here. Gold has been buying for some time now, since late August and this early September. And it has crossed level 70 as shown by this relatively strength index up to 78, which is an indication of overbought. So this simply means that the market is actually taking a breath by this pullback. Again, is profit taking, what I may call profit taking. Now, the smart money is crashing in near the high, creating that selling pressure. They stepped in here and create this sell pressure. Another thing is the liquidity grab. We often see stop hunts near new highs before the next leg up. This morning move looks more like a liquidity sweep than a trend reversal that is actually sending panic or fear in the minds of traders. All right, traders, go to the comment section. Tell me the country where you are watching from. Tell me your location so that in my next video, I will acknowledge you and give you a hug. Let's go. Here are key levels to watch. Right now, this zone at 36.35 is acting as our first line of defense. Buyers step in right here during this morning pullback. If this dip continues down, or if we dip lower, I'm watching 3600. I'm watching 3600. That is if we dip much more lower as a deeper buy zone. But as long as we hold above 3630, as long as we hold above this 3630, this market is still looking strong, and a retest of this 3659 and possibly 3680 is on the table. If we stay above this, a retest of this level and a push further to 3680 or even more is on the table. Now tell me, do you think gold will hit 3700 per ounce by the end of this week? Go to the comment section. Tell me your opinion. Are you of the opinion that by the end of this week, gold will hit 3700, or you are saying no? Let's know in the comment section. In all of this, what is the next big catalyst? US CPI data on Thursday, September 11, 2025, and the Federal Open Market Committee meeting, FOMC, on the 17th of September 2025. Now, if inflation data comes in soft, what it means that is strengthening the case for the Fed rate cut, and this is actually gold's best friend. On the other hand, a strong point of hawkish tone from the Fed could push gold back below 36.39 before buyers reload. How I am approaching this move. I'm looking for buy opportunities here if we dip further. I'm looking for buy opportunities between this 36.30 and this 36.40. You can see it's happening, but I'm still expecting a further pullback before the final move to the upside. So I am watching this zone 36.30 and 36.40. That is where buyers stepped in. You can see that buyers stepped in this zone this morning. My stop is going to be below 36.30 if I take a trade around this zone. And if it gets down to this, it will be around 36, below 36.20. That will be my stop, just to stay protected with a moderate lot size to manage my risk. To the upside, if we break this 36.59, I will scale in and I'll look for 36.80 and the 3700 as my next target. That is if we break this zone. Risk management is very important. I have never risked more than 1 to 2% of my account size per trade. This pullback is tempting, though, but discipline is key. In trading, risk management is very important. The capital you preserve today is what will give you the opportunity to come back to trade the next day. Remember, nothing goes straight up. Price moves in waves. For a particular high to hold, there must be a pullback. That is the structure. Don't FOMO into markets blindly. It will deplete your capital. Respect your risk. Use stop losses. It is better you lose small than you lose all. Always allow market to come to you. That is when you take a trade with confidence and the boldness and allow it to play out. It's always sweet when you allow the market to come to you. So to wrap up, this morning's pullback on gold is healthy and is likely just a pause before the next leg high. Remember, it is to make a high, there must be a pullback before a new high is being created. And as long as 36.59 holds, the bigger picture is still strong and bullish. And the smart money is using dips like this to reload. So watch the key levels, get prepared, position yourself to take advantage of the dips. And if you find this helpful, hit the like button, share with a fellow trader, subscribe to Finspoke for more market breakdowns like this. Let me know in the comments, do you think gold will hit 3,700 before the end of this week? Let me know your opinion in the comment section. Till I come your way next time. Peace.